Growth stocks and value stocks are two different types of stocks that have distinct characteristics and investment strategies associated with them. Growth stocks are companies that are expected to grow at a faster rate than the overall market. These companies typically reinvest their earnings back into the business to fuel growth, rather than paying dividends to shareholders. They tend to be more expensive relative to their earnings and sales, as investors are willing to pay a premium for the potential for higher future growth. Examples of growth stocks include technology companies like Apple or Amazon. Value stocks, on the other hand, are companies that are considered to be undervalued by the market. These companies typically have lower price-to-earnings ratios and price-to-book ratios than the overall market. They also tend to pay higher dividends to shareholders. Value investors believe that these companies are undervalued and that the market will eventually recognize their true value, resulting in higher stock prices. Examples of value stocks include utilities and consumer staples companies. The main difference between growth and value stocks is the investment strategy and the type of companies that they focus on. Growth investors focus on companies with high growth potential, while value investors focus on companies that they believe are undervalued by the market. Additionally, growth stocks tend to be more expensive relative to their earnings and sales, while value stocks are typically cheaper. In terms of performance, growth stocks have tended to outperform value stocks during periods of strong economic growth and rising stock prices. However, value stocks have tended to outperform growth stocks during periods of economic downturn or market corrections. It's important to note that there are also other types of stocks such as income stocks and index stocks. Income stocks are typically companies that pay a high dividend yield, while index stocks are those that track a stock market index such as the S&P 500. In summary, growth and value stocks represent different investment strategies and types of companies. Growth stocks focus on companies with high growth potential, while value stocks focus on companies that are believed to be undervalued by the market. Both types of stocks have their own set of risks and rewards, and investors should carefully consider which type of stock aligns with their investment objectives and risk tolerance. Use code BLOG to receive 25% on your next purchase.